Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets companies try to hide in plain sight. Today we're diving into Jefferies Financial Group Inc. to see what their latest filing reveals about their financial maneuverings. Stick around because what they've been up to might just surprise you. Alright, so Jefferies Financial Group Inc. has filed a Form 8K with the SEC now. Normally this form is for reporting big events that shareholders should know about immediately, but sometimes it's used for other routine updates. Let's see what's going on here. First off, we see the company's ticker symbol is JEF, and it is listed on the New York Stock Exchange, which we all know as the NYSE. It's incorporated in New York and their employer identification number is 13-2,615,557. They've got several types of securities registered with the exchange. We see their common shares, of course, but also a bunch of senior notes maturing in different years, like 2027, 2028, 2032, and 2032, and 2034. This tells us that Jefferies is using a mix of debt financing to fund its operations and growth. Now, this filing is referencing item 5.03, which deals with changes to their articles of incorporation or bylaws. It seems like TRI is a modification to the rights of their security holders. The core of this report is about Jefferies Financial Group officially creating a new class of preferred shares. They're calling them Series B -1 non, voting convertible preferred shares. They've designated 17,500 of these shares. The important part here is that these shares have specific preferences, limitations, and rights, which are all detailed in a certificate of amendment to their certificate of incorporation. This means they're adding a new layer to their capital structure. The filing incorporates information from a previous report detailing these new preferred shares. Effectively, they've established this new class of stock, and the specifics of its preferences were filed and became effective on the 19th of September 2025. Now, Jefferies is also signaling that this report might be seen as solicitation material for shareholder approval. This is related to changes in their certificate of incorporation that will authorize more shares of non-voting common stock. They plan to file a proxy statement with the SEC for an upcoming shareholder meeting where this approval will be sought. They're urging investors to read all these documents because they contain crucial information. If you're interested in the nitty-gritty, you can find these documents on the SECS website or request them directly from the company. They also mention who might be considered participants in this solicitation of shareholder votes. This usually includes directors, executive officers, and other key personnel. Information about these individuals and their interests, especially concerning their company stock holdings, is usually detailed in their proxy statements. Any changes in their holdings are reflected in other SEC filings like Form 3 or Form 4. Like most public companies, Jefferies includes what are called forward-looking statements. These are basically statements about their future expectations and plans, often using words like believe, expect, anticipate, and will. It's important to remember that these statements are based on current beliefs and assumptions, and actual results could differ significantly. They're saying that while they expect certain outcomes, things might turn out differently because of various risks and uncertainties. They also explicitly state they do not have a duty to update these statements. So what they say today might not reflect what actually happens down the line. Finally, under item 9.01, they list the accompanying exhibits. The most important one here is Exhibit 3.1, which is the certificate of amendment for the Series B, one preferred street OC we talked about. They also have the cover page interactive data file, which is formatted in inline XBRL, a standard for making financial data more accessible. The report is signed by Michael J. Sharp, who holds the title of Executive Vice President and General Counsel. This tells us that the legal department is signing off on these corporate actions, which is standard. The date of the report is the 19th of September 2025. Now, looking at this filing, the most significant action from Jefferies here is the establishment of these new Series B -1 preferred shares. While this report doesn't contain deep financial tables, its essence is about corporate restructuring and potentially setting the stage for future financing or strategic moves. The fact that they are issuing non-voting convertible preferred stock could signal several things. It might be a way to raise capital without diluting the voting power of existing common shareholders, or it could be tied to specific transactions or partnerships. Convertible preferred stock also gives the holder the option to convert their shares into common stock under certain conditions, which adds another layer of complexity and potential future equity dilution. The mention of authorizing additional non-voting common stock also hints at future capital raising plans. From a high-level perspective, companies like Jefferies, which are in the financial services sector, often adjust their capital structure to optimize for different market conditions, regulatory requirements, and strategic opportunities. The creation of a new preferred stock series is a common tool for this. However, without more financial data presented directly in this 8K, it is hard to gauge the immediate financial impact. The key takeaway is that the company is actively managing its capital structure, likely in anticipation of future business development or to solidify its financial footing. The risks mentioned in the forward-looking statements are broad but essential. In the financial world, risks can come from market volatility, interest rate changes, regulatory shifts, and competitive pressures. By issuing preferred stock and planning to issue more common stock, Jefferies is navigating these complexities. The non-voting aspect is particularly interesting as it suggests a desire to bring in capital or structure a deal without giving up direct control. Overall, Jefferies Financial Group appears to be strategically adjusting its corporate structure. This move with the Series B, one preferred street OC, and the planned increase in common stock authorization is a clear indication of proactive financial management. While we don't have the detailed numbers here, these are foundational corporate actions that can set the stage for significant future developments. Alright, that's our breakdown of this Jefferies Financial Group filing. What are your thoughts on the company's move to introduce new preferred shares? Do you think it's a smart strategic play, or does it raise any red flags for you? Drop your opinions in the comments below. If you found this analysis valuable, please give this video a thumbs up and subscribe to Corporate Decoder for more insights into the financial world. And don't forget to join our Discord community, linked in the description, for more in-depth discussions. Thanks for watching. See you next time.